Hey guys, in this video, I will show you a price action trading strategy that will change the way you trade. Now, the core of the strategy relies on the concept of momentum loss shown through candle sizes and shapes, which is a very powerful price action technique. Here we have the Kiwi dollar. So if you've watched our other videos, you know we always want to identify key levels first. And as you can see, we have a level of support here, where price hit and reversed from, and now we are back here again. Here is a very key point you need to know in order to spot high probability reversal trades. We want to see candles getting smaller and smaller as they approach a level of support or resistance, because it shows that price is losing momentum. Very key point. You want price to be losing momentum and slowing down as it approaches key levels. Now, as price approaches this level of support, look at how the candles behave. As you can see, we have a big candle, followed by a smaller candle, followed by an even smaller candle, another smaller candle, and then a smaller long wick candle rejecting support. And finally, an even smaller green candle that is also a doji and an inside bar, which is a reversal candle. This results in a bounce upwards. I'll show you this again on another pair. Here we have the Australian dollar. This is a key level of support, as you can see from when price got here last. It hit and reversed upwards. So as price approaches this level again, we have a big candle, then a smaller candle, an even smaller candle, which is also rejecting support. Then we have this beautiful green long wick candle rejecting support, and then followed by another great inside bar candle rejecting support as well. As you can see, price bounced upwards, which would have presented a great trade opportunity through the intraday timeframes. What these smaller candles mean? When approaching support, these smaller and smaller candles show that sellers and people shorting the market are losing steam. This means some sellers might be taking profit as they notice this level of support, which causes these smaller candles. New Zealand dollar, Japanese yen. Let's jump to another example. Here's the New Zealand dollar, Japanese yen. As you can see, we have a double top here before price tanked down, making this a key level of resistance. Now, as price approaches this level again, look at how the candles start acting. A big candle, followed by a smaller candle, followed by a smaller red hanging candle, another hanging candle, and then a candle where the wick is rejecting this level of resistance before price drops another great trade opportunity. Here's the CAD CHF. Again, we have 3 rejections of this level before it reversed downwards, making this a key level of resistance. As price approaches this level again, a big green candle, a smaller green candle, where the wick is also rejecting resistance, then an even smaller red bearish candle. As you can see, price reversed downwards. Pro tip: watch for candle color changes. Look for a candle color change at support or resistance, which can signal a trend change. Here's what I mean. As price is moving upwards, notice all the green candles. Bullish price action. We have 8 green candles in a row, and finally a red bearish candle appears right at resistance, and as you can see, price then reverses. What price action to avoid now? I'll show you examples of price action to avoid. If you want to learn more about this concept in depth and other very powerful strategies that can improve your trading, go to www.cryptocsolutions.com. Sign up and take your trading to the next level with our powerful crypto tools and education. Follow us for more content like this. Looking to the left, we see a clear level of resistance. Now look at what happens when price approaches this area again. We have a small candle, but then the following candle is large, showing a gain of momentum. You do not want to see momentum gaining as price approaches key levels. If price doesn't slow down, there's a high chance it will break right through. As you can see, there was no price action that signaled a reversal. I'll show you this again on another pair. Here we have the dollar CAD. As you can see, we had a double top, and then price reversed, giving us resistance. Now look at what happens as price comes up again. We get a small candle, then a massive engulfing candle. This shows that price is picking up speed and momentum as it approaches the level, meaning buyers are in control. The next candle shows people tried entering short, but that failed. Price blew right through. That's a mistake most beginner traders make. They see the long wick candle and think, "Oh, great short." Be very careful when large candles approach support or resistance levels. Let's jump to another example, the dollar-yen. We have a double top making resistance. As price approaches this level, a big candle, a smaller candle rejecting resistance, another rejection candle, and then finally a red candle rejecting resistance, price reverses downwards. Now here's a perfect example of momentum loss. Not occurring, we look left and see two rejections, making it a good level of support. But as price approaches, we get a massive red bearish candle, showing that sellers are still in control. A small green candle appears, but it's just sellers taking profit. Then another bearish candle breaks right through. There was no buy opportunity at this level. Summary: good versus bad price action. Look at the difference between good reversals, with small candles, wicks, and momentum loss, versus bad setups, where price builds momentum into key levels. Let's do a few more examples to drive the point home. If you're enjoying this content, please leave a comment below and hit the like button. We look left and see a double bottom, then price went up, making the support. But there's no trade here, because price makes a massive bearish engulfing candle and blows right through. In contrast, look at the top. A big candle, a smaller candle, an even smaller doji candle, also rejecting resistance. Then a red bearish candle, also rejecting resistance, price reverses, and we enter a trade on the intraday time frame. A UD/CAD. We look left and see a clear level of support. As price comes down, a big candle, a smaller green candle, a candle showing buying pressure, then a beautiful long wick candle rejecting support. Price takes off upwards. Later, price comes down to this area again. A big candle, then a smaller long wick candle rejecting support. Another perfect long wick candle, then a green inside bar rejecting support. Price reverses upwards again. Trading involves zero guessing. You simply look for the right price action and act on what you see. That's what technical analysis is in a nutshell. Final example, GBP/AUD. We have a double top at resistance. As price rises, a big candle, a smaller candle, an even smaller candle, a red doji rejecting resistance, an inside bar, then a reversal. Some traders might notice another resistance level nearby, but what happens? Price creates an engulfing candle and breaks right through. No valid reversal signal. Along the bottom, we also have a level of support from previous rejections. As price approaches, we see multiple small candles, followed by three candles where the wicks reject support. Then price takes off upwards. Trading involves zero guessing. You simply look for the right price action and act on what you see. That's what technical analysis is in a nutshell. If you want to learn more about this concept in depth and get actual trade entries, head over to our website, www.cryptocsolutions. Sign up and get the key strategy that will instantly improve your trading performance for free. Thanks for watching, and I'll see you in the next one. Click the subscribe button and follow us.